Now, even though there's several different ultra-high yielding ETFs that pay a massive amount of dividend income from day one throughout the market, not every single ultra-high yielding ETF is going to be created equal. And if what you're solving for is to find, locate, and purchase ultra-high yielding dividend-paying ETFs in the hopes to retire early and live off the dividend income, use the dividends for your bills, etc., you're going to want to buy high-yielding ETFs that all have a few things to offer, and ETFs that are not going to trap you whatsoever. Now in this video, we're going to go through several different higher yielding, even ultra high yielding ETFs that are going to pay you a massive amount of dividends from day one. Now these ultra high yielding ETFs not only pay a massive amount of dividends from day one, but also either have upside potential and or don't decay, at least haven't so far. On top of that, because of these ETFs' massive yield, it's not going to cost investors an arm and a leg to retire early compared to if they were investing in more traditional investments. So if you want to see which ultra high yielding ETFs could potentially allow investors to retire a lot sooner, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first high yielding ETF that could be a potential contender for an investor looking to retire early, never work again, and use dividends for things like bills and other things is none other than one of my favorite ETFs across my entire portfolio personally, the JPMorgan NASDAQ Equity Premium Income ETF, or JEPQ. Now, even though JEPQ on the max time frame as far as price return goes doesn't really even resemble a high yielding, high income ETF, and this is because this ETF has grown and grown and grown for the most part over the past few years. The ETF is up around 10% in the max time frame and up around 10% in the 1 year time frame. Now, even though this ETF has been going up and up and making a lot of us investors up substantially from our cost basis, JEPQ also pays a nice solid dividend every single month to the tune of around 9% on the trailing 12-month dividend yield. Now, an ETF that pays around 9% per year is going to give an everyday investor a great chance on retiring early, and this is because 9% yield more or less is going to give you, say, around 4 times the amount of dividend income that you would receive if you, for example, invest into something like the S&P 500. Now, JEPQ is a great contender to live off of, in my opinion, because this ETF, at least so far, has moved up and to the right over time, which means that your portfolio is not only going to grow, but this ETF with a 9% yield, even if you took, let's say, half of the dividends every single month and use that dividend income for things like bills, reinvested the rest back into more JEPQ, that's definitely a long-term sustainable option for investors that want to live off of dividends a lot sooner. Now, another potential option for an investor looking to live off of dividends a lot sooner, this one is a little bit more risky, and this ETF, at least so far since the beginning of this year, does have a little bit of decay, which of course, like I said, is not what we're looking for, but the YieldMax, the YieldMax Universe Fund of Option Income ETFs. Now, YieldMax basically holds on to every single more or less YieldMax ETF across their entire list of ETFs. And although I'm honestly not the biggest fan of YieldMax ETFs, I do own some TSLY, some Coney, etc. But the fact that a lot of the YieldMax ETFs, although they pay massive dividends, they have decayed over time, and this is just because of the function and the strategy of the ETFs. But YieldMax giving you a very diversified piece of all the different ETFs in the YieldMax family could potentially be a good option, at least in a small portion of your long-term portfolio, if you're looking to live off of dividends a lot sooner, and if we're talking ultra high yield here. Now, YieldMax is definitely offering a ultra high yield at around a 41.28% distribution rate. So although the ETF in the max time frame is down around 5.62% as far as price return goes, and again, like I said, I'm never really a fan of investing into things that are going to lose value over time, but in the context of a 41% yielding ETF, that's paid 65, 73, 73, and 63 cents monthly, at least as of so far, for an ETF that costs around $18 or $19. This one is going to be a little bit higher risk, in my opinion, but if you are an investor that wants to invest into ultra high yield and potentially use some of the dividends to reinvest back into more YieldMax, and along with that live off of some of the dividend income, YieldMax could be one to look into, if I'm going to be completely honest. Another ultra high yielder that I personally hold quite a bit of in my portfolio is SVOL, or the Simplified Volatility Premium ETF, which so far this year SVOL is basically flat, and because of the drawdown in the last few days, SVOL is down around 1.14%. Now, even though SVOL is trading basically flat, this ETF pays around 30 cents more or less, or at least has, to investors like myself consistently month after month after month, which if you total that all up, we're looking at around a 16% trailing 12-month dividend yield, which is massive and is going to give investors plenty of income, plenty of dividends to live off of if that's what they're looking for. Another ultra high yielding income ETF that I think is extremely safe, at least relatively speaking, is SPYI or the NEOS S&P 500 High Income ETF. Now, on the 1 year time frame, SPYI is basically flat. Year to date, it's up around 5.04% though. Not to mention this ETF has around a 12% trailing 12-month dividend yield and has paid consistent dividends, very consistent, around 51 to 50 cents every single month since inception. Now, because this ETF is only around $50 or $51 per share and pays around 50 cents more or less per month, that means that every single time you buy 2 shares of this ETF, moving forward, you're basically giving yourself a future $1 dividend for the up and coming month. Now, if you were to invest consistently into more and more SPYI and basically more or less quote unquote guarantee yourself a 50-cent raise moving forward, it wouldn't really take all that long until you invest enough to be able to cover an entire bill, say insurance, a cell phone bill, etc. Now, because this ETF is not only traded sideways, but also up and to the right on the max time frame, this ETF has not shown any signs of decay, and of course, hopefully not moving forward. But SPYI's performance, the strategy, and of course, those consistent dividends that we've seen so far, this ETF has the potential and is going to be one of my key components in my long-term portfolio to pay for my bills in the future, etc. Now, lastly, as far as ultra high yielding ETFs that do have the potential to pay all your bills in the future, using dividend income alone is none other than FEPI or the FANG, an innovation equity premium income ETF. This ETF is relatively new. It's only been trading since around October of last year, but at least so far, this ETF is not only up around 4.5% in the max time frame, but also more importantly for the context of this video, this ETF has paid around 17-18% as far as dividends go, and that's on the trailing 12 months. Now, FEPI's paid around a $1.15 all the way up to a $1.20 dividend on a monthly basis since this ETF's inception, which keep in mind this ETF is only around $53 per share. So in theory, if this ETF just even trades sideways, let's say it moves up 1 or 2% over time, just to kind of somewhat keep up with inflation, if this ETF is going to pay you $1.20 every single month for every single share that you own, it's not going to take much money whatsoever to get to the point to where this ETF's dividend could pay for things like your cell phone bill, your car payment. It would most likely only take a few years of consistently investing into something like FEPI to where this ETF is covering quite a bit of dividend income for your overall expenses. Now, if you're looking for an ultra high yielder that at least so far has a nice solid total return and pays a massive dividend every single month, definitely check out FEPI. So there's some of my favorite ultra high yielders as of right now if I were to just basket up a few ETFs across the entire markets. Now, of course, I've went through every single one of these ETFs that we talked about in this video in detail throughout my channel, so definitely check out some of my other videos if you want to learn more about any of the ETFs we talked about. But now lastly, most importantly, I want to hear from you guys down below. Out of every single ultra high yielding ETF that we talked about in this video that do have the potential to pay for your entire life's expenses and then some, which is your absolute favorite? If you had to pick one, let us know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.